This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com.
Chapter 4, page 19. Oh dear, it's a long one, isn't it? It's good to know that every time we turn to a new chapter, someone is checking to see how long the chapter is. Quality control. Policies and procedures defined as those designed to provide reasonable assurance as to the appropriateness of the auditor's report and adherence to auditing standards, ethical and other requirements. Firms should establish and communicate to audit engagement partners and staff quality control policies and procedures. This will be done by internal training. You'll go on an annual internal training course, and some senior in the firm will have been delegated the responsibility of researching the up-to-date elements of quality control, and this will be communicated to all the members of the audit department. It involves the establishment of an appropriate structure within the firm, including the appointment of a senior audit partner or assurance partner to take responsibility. You've got there a little table. The partner who takes responsibility for establishing quality control policies and procedures must be a senior audit partner and cannot be someone external. Then we have partners who take responsibility for monitoring the quality of audits. Again, a senior audit partner, but not the quality control partner. You have a problem there. When I had my own practice, it was just me. So I was the one responsible for quality control, which meant there was nobody responsible for the quality of audit, because I was the only one. Because I can't be both. It says here I can't be both. So you have problems when you get to sole practitioners, firms which are just a one-person firm, like I was. And in that situation, there really ought to be some reciprocal arrangement made between the sole practitioner and another sole practitioner within the area, and regular meetings, not necessarily alcoholic meetings, but regular meetings between the two to discuss problems that they have each individually have come across in their own practice. That way we can get around this position, this problem of only having a one-partner firm, a sole practitioner. Audit engagement partner, a partner or other person in the firm who is authorised to issue an auditor's report on behalf of the firm. Can't be the independent partner, the one above, for the audited entity, or any other entities in the same group. And then we have an individual who performs independent review. This is an independent partner with sufficient experience and authority, and the individual does not necessarily have to be a partner. I remember the firm I qualified with, they had appointed a quality control manager. So he was taken away from the day-to-day activities of auditing, and all he did every day, week after week, was review audit files to see that quality had been maintained in preparation for those files to be submitted to the partner for partner review. So you can appoint either a department or an individual whose sole responsibility it is to review audit files. What a life. That must be almost as exciting as being the admiral in charge of the Uzbekistan Navy, or the Liechtenstein Navy. That must be so fulfilling as a job. Just as a digression and for your own benefit and general knowledge, what's the connection between Liechtenstein and Uzbekistan?
Do they have navy?
Not only do they not have a sea coast, none of their neighbours has a sea coast either. They're surrounded by other countries that don't have a sea coast. So to be Admiral of the Navy is a position I've applied for many times but never succeeded with. Page 20, acceptance and retention. Before accepting a new audit, we're back again with Yvonne and being invited to accept nomination. Before accepting a new audit engagement, Yvonne should ensure that she's competent to undertake the work. She can consider carefully whether there are any threats to independence and objectivity. Assess the integrity of the owners. Do you really want to be associated with me? Do you really want me as a client? Am I a person with unquestionable integrity? Or am I doubtful? And have I been hitting the newspapers recently? Have I, for instance, taken the stone sets, the stone pieces, which lined your main thoroughfare from Parliament to the cathedral? Have I taken those and used them on my own driveway at home and had them replaced at city expense by material which is not suitable for heavy traffic? Have I done that? Because I understand that a mayor of a certain capital city in Europe has done just that. Am I wrong? And comply with the ethical requirements of the professional accounting bodies in relation to changes in appointment. Remember, writing letters backwards and forwards, getting permission. Firms should also ensure they reconsider these matters when deciding whether they're willing to continue in office as auditors. Into logistics and resources, firms should have sufficient engagement partners and audit staff with the necessary competencies to meet the needs. Competences are developed through professional education and development, including technical and management training, in-house courses, external training. Audit firms, big reputable audit firms, like Indra's, do have internal courses to maintain levels of competence and professionalism. The smaller ones, they find that difficult. It's very expensive because not only have they got the expense of running the course, but they're also losing the charge-out time as well. But they will be internal courses. External courses, can you think of any external course maybe that people like Indra will go on? ACCA courses, leading to P7. That's an external course. Work experience and coaching by other members of the audit team. It's a learning exercise. Being an audit junior and A1 assistant and semi-senior and senior and manager, it's all a learning exercise. It's all additional experience adding on to the experiences that you have previously gained. And part of that training and part of that experience is given to you by the audit senior. They will say, this is what I want you to do and this is the reason why you're doing it. And that's what a good audit senior or assistant in charge would do. They would guide the junior staff and monitor and control the junior staff in the junior staff's activities. And again, people like Indra and Aushra, people like these will have that responsibility delegated to them. So now I presume that you find yourself training the new intake. When you're out together on audits, and then you will be identifying to the new intakes, last September's intake, exactly what they should be doing and why they should be doing it, and how to do it, and how to fill in the bubbles in the computer program, little blue bubbles and little circles without blue in them. And you'll be showing them how to do that. Yeah? Of course you are. The assignment of personnel to engagements, that's part of competencies. There's another thing. That's a strange, it's a bit of an anomaly. You assign people who are competent to do audit tasks where you know they're competent. But actually that can't work. It can't work. Because we would never, any of us, get beyond doing a bank reconciliation. We know we're competent at doing bank reconciliations, so you're given the bank reconciliation to perform. And unless you're given something which lies beyond your experience, you never gain in experience. So all the time you're being stretched further and further and further. Controlled, monitored, your performance is monitored and reported upon, but all the time you're given work which lies beyond your immediate experience in order that you then become experienced in that type of work. And the next time that type of work comes along, you don't get allocated it because it's allocated to someone that's never done it before, and you're given something that you've never done before. And it's a strange thing, isn't it? Have you ever thought about that? Have you never thought about what a strange world I live in? Yeah. Audit engagement partners should be appointed to each audit engagement undertaken by the firm, taking responsibility for that audit. Should assign staff with the competencies necessary. These competencies include understanding and practical experience, understanding applicable accounting, auditing, ethical and other standards, knowledge of specific industries, professional judgment, and understanding the firm's quality control procedures and policies. How would you, I'm going to change a P1 question round, how would you as an outsider determine that the members of an audit firm are aware of the firm's policies and procedures? How would you do that? If I gave you the task, as an outsider, if I gave you the task to find out whether the Deloitte students were aware of the Deloitte policies and procedures, how would you go about finding out that they were aware?
Check.
Check what?
Whether they know or not.
How do you do that? That's what I'm asking.
Take the policies and requirements and ask the points,
and ask them. Yeah. Establish, get a copy of the policies and procedures, which should be on your permanent file anyway. Get a copy of the firm's policies and procedures, read through them to make sure you understand them, and then go and ask individuals within the office and say, do you happen to know what the firm's policy is with reference to this? Do you happen to know what the firm's procedure is with reference to something else? Ask them. Now let me turn it back into a P1 question. How do you determine that the employees, all the employees of a client, are aware of health and safety requirements?
They should sign the form.
They should sign the form. Some of them can't write, so they put a mark or an X on the paper. How do you determine that that X belongs to them and not to somebody else? Ask them, yeah, you talk to them. There are other ways you can do it. You can have posters around the workplace that says health and safety comes first, don't cut corners, don't cut your fingers, health and safety is important. And it is important, because if health and safety laws or rules are broken and somebody is injured, then that can result in heavy fines for the employer. There was a case in England not long ago, 10 years ago, about a man who operated a machine, and the machine cut rubber, cut old tyres up, and it had a spinning wheel at the bottom of a shaft, and you put an old tyre in there and the spinning wheel would cut the rubber up and bits of rubber would come out at the bottom. But of course every now and then it gets stuck. So he switched the machine off at the top and he climbed down the ladder inside, and he was cleaning out the mess which had stopped the blade going round. And his son had come home early from school. And he went to see his father at work and said, I'll walk home with you, Dad. And he said to someone, he said, where's my dad? He says, in the machine down there just cleaning it. So he looks over, he says, hello, Dad, hello. Dad, what's this button for? And it was the button to press the machine on. And the blade went round and round and round, and his dad was disappeared. That shouldn't happen. It shouldn't be possible that that happens. Either a sensor within the shaft, or a guard with a key to lock the button, or the handheld button so that it's in his pocket, or put on a ledge halfway down the shaft in order that nobody can turn the machine on accidentally. There's another one, it's a P7 question about a roll-on, roll-off ferry, where a ferry goes to a port, drops its plank down and cars drive on, and then it lifts up and we set off again. And when we get there, the front drops down and the cars drive off. And it happened recently. It was in Zeebrugge in Belgium. It was a roll-on, roll-off ferry, and one employee on the ferry, his sole responsibility, his only job, was to close the door and then open the door at the other end. That's all his job was. And they set off from Zeebrugge, and the door was not properly closed. And the engines started up. They pushed the sea against the ferry, against the harbour wall. The sea washed back and through the open door, which tilted the ship, and the ship rocked from side to side and then turned over. And the investigation found that the man whose responsibility it was asleep in his bunk, in his bed. On the ferry, he was asleep in his cabin. Now, it should not be possible that the ferry can set off with the door still open. So what they now have is cameras, so that the pilot of the ferry can look in the camera, look on the screen and see. Or there should be a green light in the pilot's cabin that says, yes, the door is closed. But that didn't happen. So health and safety is very expensive. Wasn't it an Italian ferry that ran aground recently? The Costa Carnival or something, the Costa Carnival. And it was because the ferry pilot had a female friend who was... He was showing her how close he could get to the shore. And he got very close, he hit the rock. And there's still 6 bodies unrecovered. There's still 6 people in the ferry. And they don't know how to right it. They don't know how to get it up. It's going to cost millions. Health and safety breaches are expensive. How did we get there? Are we on page 21? Or have I skipped a page? No, I'm on page 21. Consultation. Establish procedures to facilitate consultation and ensure that sufficient resources are available to enable appropriate consultation to take place in relation to difficult... This is within the audit firm. This is within the audit firm. That when a member of the audit team comes across a particular problem that lies beyond their immediate competence or their immediate experience, there should be a procedure where they can discuss this matter. What should I do about this? When you're a junior auditor and you find a mistake, yes, I found an error and it's for 3 cents. Who cares? So I found a mistake, but nobody cares. Well, why does nobody care? It's a mistake. But it's not material. So consultations take place in order that I can discuss with my immediate senior, and he can discuss with his immediate senior. She can discuss with the manager, and the manager can discuss. There should be consultation. It's a pyramid shape, that the 1 or 2 people at the top will discuss in a pyramid format. The 20 intake will discuss with the 15 seniors, will discuss with the 10 managers, and so on. So consultation procedures should exist to resolve disputes, to resolve uncertainties, to resolve contentious matters, and particularly important is where there's a matter which the senior or the manager feels deserves a qualified audit opinion, but the partner thinks, well, maybe not. It's not that material that it should be qualified. Or maybe the manager says it's not qualified and the partner says it should be. So there should be consultation procedures. And in that situation, about contentious audit opinions, the partner would be well advised to take a second opinion of another partner within the firm, whether it's in the same office of the firm or whether it's in the next country's office of the firm. There should be consultation procedures in order to maintain practice management and quality. Results of consultation relevant to audit conclusions should be documented. Consultation on technical matters could amount to simple requests for advice from a technical department or from an expert within the firm. Procedures are designed to ensure that individuals of appropriate seniority and experience are consulted on all difficult or contentious matters. The results of consultations should be properly documented. Why is it necessary to have proper documentation of things like contentious matters? From your F8 days, I will have told you, because it's something I always say at F8. As a general principle, the audit file should speak for itself in a court of law. The audit file should be so comprehensive that if there's a dispute about the applicability of an audit opinion, you just give the file to the judge and say, there, that's the work we did. That's the documentation of the work, documented evidence of the work that we carried out, showing the dates and who carried it out and who reviewed it and what date it was reviewed. There's our file. You don't need me to tell you anything because it's all there on the file. It speaks for itself in a court of law. Why is it important? To avoid dispute. Why is it important? To protect yourself in the event of a negligence action. The working papers on a file are only there for one reason. They're there to support the assessment of the people who've done the work. So the summary or the conclusion at the bottom of the working paper supports the work which has been carried out. That is reviewed by managers to confirm that the work carried out is in line with the audit plan. And it's then passed to the partner, and the working papers provide the evidence which are the basis of the audit partner's opinion. And if that opinion is negligently given, then the firm's in trouble. So there's a lot of effort goes into the collection and documentation of evidence necessary to support the audit opinion. That's why you live. That's what your life is about, you auditors. That's why you get up in the morning, is to provide evidence in documentary form so that the partner can reach an informed opinion on the truth and fairness of the client's financial statements. Without that, what is life worth? Direction, supervision and review. Engagement partners should ensure that audit work is directed, supervised and reviewed in a manner which provides reasonable assurance that the work has been properly performed. And planning is an important means of providing that direction. Why is it necessary to plan an audit? Why do you not just go and visit the client and say, here again, do you remember me? I was here last year and the year before. Well, I'm here again now, so can we start? Unless it's got a plan, unless you've designed a plan which is designed in such a way as to provide you with reasonable assurance that the financial statements are free from material misstatement, unless you have a plan, you lose direction. And if you lose direction, it's like an auditing answer. If you lose direction, you start wandering and you wander away from the core element of the question. And you start talking about all sorts of extraneous, irrelevant matters. And you lose the marks. Unless you've got a plan giving you the direction, then you're not going to do yourself justice. In an audit context, unless the audit is planned, it stumbles along without any focus. Supervision includes direction and review. Once we've planned and got the direction, it needs to be supervised to make sure that the plan is followed. But supervision is also review. That as the audit is progressing, progressively more senior personnel are reviewing the work of the junior personnel. And there is evidence of that review on the audit file, the date that that review is carried out. Because if an audit procedure is carried out not to a satisfactory, not in a satisfactory manner, then it needs to be reperformed or it needs to be extended. And so review is a continuing process throughout the course of the audit. Supervision includes monitoring the progress of the audit to consider whether assistants have the necessary skills and competences to carry out their assigned tasks, and that they understand the audit directions and the work is being carried out in accordance with the firm's procedures, in accordance with the plan, in accordance with the program. We need to address significant accounting and audit questions raised during the audit, assessing significance and modifying the overall plan. The plan is not written in tablets of stone, it's a flexible matter. As you come across particular areas which were unforeseen, you need to adopt and adapt the plan. You need to change it. You need to say, well, it happens that there is very little inventory at the end of the year, but there are a lot of receivables. So you do more work on receivables and less on inventory. So you need to adapt the plan, or adopt and adapt the plan, and change it according to the differing circumstances as they occur through the course of the audit. On a Wednesday morning, when the Chief Financial Officer comes in and says to the audit senior, we've just had a letter from a customer who claims that as a result of our faulty machinery, they've now had their arm cut off. The audit senior says, oh, that's bad luck. Oh no, you've got to think about how many other bits of faulty machinery have been sold and how many other people are now armless. So that will change your plan, that will change your focus. This could give going concern implications if all our machinery cuts people's arms off. There's a football team in Scotland, it was on the news last night, it's called Dunfermline Athletic. And they've applied for administration yesterday. But at 5 o'clock yesterday, when they hadn't paid a £180,000 tax bill, they'd applied for administration. At 5:30, the Inland Revenue, the tax authorities, have sought to have the company put into liquidation. And the manager of Dunfermline Athletic was talking about Saturday's game, the game in 2 days, 3 days' time. He says there may not be a game. If the liquidation order is granted, there won't be a game. Things change on a daily basis. You can't foresee the fact that a football club is going to go into liquidation, although that should have been foreseen because it didn't happen overnight that their problems arose. Work performed by staff is reviewed by more senior staff. I've covered that. Independent review. Firms should ensure that independent review is undertaken for all audit engagements where the audited entity is listed. It should not be left internal. There should be an independent review carried out. Firms should establish policies setting out circumstances where independent review should be performed for other audit engagements, whether on the grounds of public interest or audit risk. Independent review should take place before the issue of the auditor's report in order to provide objective independent assessment. If the review is carried out before the signing of the audit report, it's described as what type of review? Hot. It's a hot review. If the review is carried out before the committing of the audit opinion, it's a hot review. And that's distinct from and different from a cold review. Cold review is where, on a regular basis, maybe every 2 years, a partner from another country in the same firm will come and visit the firm and they'll say, let me have a look at last year's audit files. I want to review a sample of last year's audit files. The audit opinion has been given, the financial statements have been distributed, they've been filed with the company registrar, and now along comes a partner from the same firm, from another country typically, and they will review to make sure. It's called shutting the door after the horse has bolted, after the horse has run away. It's too late, because the horse has gone. But at least we can make sure afterwards that, yes, okay, it doesn't matter that the horse has gone, because the audit was carried out properly. That's cold review. Cold review is where the audit opinion has already been given and the financial statements distributed and filed with the government. Monitoring. Firms should appoint senior audit partner to take responsibility for monitoring quality of audits carried out. The objective is to provide an independent assessment of the appropriateness of the report and the conduct of the audit in accordance with standards, ethical and other regulatory requirements. And also to determine whether the firm's quality control procedures and policies have been applied in practice, and whether appropriate consultation has taken place and has been properly documented. Advertising, publicity and obtaining professional work. This has changed quite dramatically since I was a trainee. When I was a trainee, advertising was not allowed. Promotional material was not allowed. You couldn't put your name in yellow pages in a box to distinguish you from others. But now you can. So all the firms put their names in a box, so now they're not distinguished from any other firms. So all the firms put their name in a box, except those that don't, and those that don't, well, you don't read those because you read the ones in boxes. So it's a strange thing. Advertising on television, advertising at airports. I think your firm advertised, or used to advertise, at the airport. It did, didn't it? And KPMG did. And Lane Nonan, they did. And Rodel, they did as well. But not EY, I don't think. Not BDO, not Moore Stevens, not Grant Thornton, not Deloitte's. So not every firm does it, but there are firms that do. They put an advert up there and say, we're helping the professionals around the world, or whatever. The first advert I remember seeing was one from Touche Ross. Do you remember Touche Ross from Capara? Touche Ross had a television advert, and it was a mini video of a man wearing not many clothes, swinging through the trees. Do you know the film Tarzan, or the story of Tarzan? Swinging through the jungle. And it said, don't get lost in the jungle, get in touch with Touche. Which is quite funny, because touch and touche is similar words. But the Institute of Chartered Accountants said, this is bringing the profession into disrepute. I mean, we don't want to be associated with men with hardly any clothes on, swinging through trees. So they had to withdraw the advert. But the Institute of Chartered Accountants itself, about 10 years ago, had an advert on advertising boards as you're driving along the motorway, not the motorway, as you're driving along roads. You could see advertising boards, and it said, it's easy to sleep with a chartered accountant. Now, it's not what you're thinking. What it says is, if you have a chartered accountant helping you with your financial statements and your tax problems, then you can sleep at night in comfort and without fear of any retribution or punishment. So it's easy to sleep with a chartered accountant. Which they didn't, or they decided that was in keeping with the profession. It wasn't bringing the profession into disrepute. Just briefly then, can you read advertising, publicity and obtaining professional work? And carry on down through fees as well. Okay. And then we get this item, lowballing. And lowballing is where a firm is invited to tender for an audit, and they fix the audit fee, their tender, at a ridiculously low level just to get the audit, just to get the work. And the intention is that having got the client will then stay with us for a number of years, and so we've improved our business. I mentioned earlier that the fees at the moment here, in some instances, are only 30% of what they were 5 years ago. And it will take another 20 years to get them back up to that level that they were 5 years ago. That's lowballing. It keeps your clients, it keeps your staff busy, it avoids redundancies, so that your staff is busy, and the fee that they're earning is a contribution to the overheads and staff salaries. But what about offering to do a job for no fee? What if you asked me to send my tender in, and I set out all the details on the tender, and I tick all the boxes, and then I say, in total then, I'm going to quote you a fee of 0. I'll do your first year audit free. Why would you do that? In order to get the work. In order to attract the new clients, so that next year we've got a nice income stream from the new clients that we had. It's expensive because I've got to pay all my salaries this year out of the existing fees that I have. But at least I can improve my client base. It happened in South Wales 20 years ago, and it was discussed extensively as to whether this was an acceptable technique or an acceptable strategy, and there's nothing against it. The silly thing is that of all the audits that a firm ever does for a client, the most expensive one is the first one, because the first audit is the one where you have this big learning curve about finding out about practices and policies and systems and staff and products and the market in which they operate. So it's the first year's audit which is the expensive one. And the sensible way to do a lowball is surely to say, this is our fee for the first year, but we'll do the second year free. That would be far more sensible. But I don't think people do that. But when you're qualified and you set up your own firm, That's what you should think about doing. Explain the ethical implications of the following two practices in relation to fees: fixed fees and lowballing. Fixed fees are now a thing of the present. Fixed fees never happened. Again, when I was a trainee, there was no such thing as a fixed fee. A fixed fee is where the auditor says to the client, we'll do the audit for 15,000. And that's it. 15,000 is the cut-off, and we will complete the audit. Now, if we can do the audit and it only costs 7,000, we'll still get 15. But if we do the audit and it costs 20,000, we'll still only get 15. So fixed fees are a thing of the present, but they never were when I was a student. When I was learning, it was always that the client was billed on an hourly rate, depending on the level of seniority of the audit team member. So, what are the ethical implications of fixed fees? What are the ethical implications?
The audit company will not perform the job
to a satisfactory professional level.
Yeah.
The possibility that in order to do the audit within the fixed fee charge out, there may be, and it could be easily seen that there could be, an incentive to cut corners, to reduce the scope, not to do enough work to get reasonable assurance that the financial statements are free from material misstatement. So it could be thought by the uneducated outside world that that would be an ethical implication. But of course you have to rely on the professionalism of the members of the profession. And without a second's hesitation, I'm going to say that will not happen. You're right to say it. It is an ethical implication. But it should not happen in practice. That if we do have a fixed fee, then the fixed fee will have been determined on the basis of the amount of work that would be necessary in our view to provide us with sufficient evidence, appropriate evidence, to confirm our audit opinion. But it is an ethical implication that we will be tempted, may be seen to be tempted, to reduce the quality of our audit work, or the scope of our audit work. Any other ethical implications on fixed fees? Money, yeah. The pinny guy aspect of it. Yeah, the money side of it. The fixed fees, when determining a fixed fee, you must always bear in mind the percentage levels. And that the fixed fee that you're proposing should not exceed the 10% or the 15% as appropriate. Fixed fees, again, another ethical implication. It's really a spin-off from that first point, that in order to still have a profitable assignment, it could be that we assign members to the audit team of lesser competence and cheaper charge-out rate than would be justified. If we didn't have this fixed determined fee, then we may be tempted to use cheaper staff. I had another one in my mind as well. The fixed fee, if it is accepted, shouldn't, but it could influence the quality of the work carried out. But to an extreme degree, if we decide we can send junior staff out to do the audit, then it could be that the fixed fee is not value for money for the client. It may be the cheapest one, but it's not value for money for the client. When I'm fixing a fixed fee, I'm thinking to myself, this is the cost that I want to cover with the profit element as well. But then if the audit is more efficient, then I could do the audit for less, but I've got the fixed fee. I could do the audit for maybe 12,000 normal charge out, but I've got a fixed fee of 15. Do I invoice 15 or do I invoice 12? So it could be disadvantageous for the client. An advantage from the client's point of view is that it enables planning. It eases planning and budgeting, that they know that they're going to have to pay for an audit and they know how much it's going to cost. So from a client's point of view, not an ethical point of view, this is just a by-the-by comment, from the client's point of view, it would enable more certainty in the planning process and the budgeting process. Lowballing, frowned upon. It's a bit of it's seen as a bit of a cowboy activity. It's seen as a bit of to coin an English expression, it's just not cricket. It's not cricket. It's not a gentlemanly thing to do. It isn't lowballing. What you should do is you should be telling the client what is the fair fee for the fair work that we do. And to fix that artificially low it leaves a bad taste in the mouth. It's not a nice thing to do. From the profession's point of view, from the client's point of view, it's perfect. It means that if I submit to tender and I get a low ball from your firm, then I'll take it. I'll have the first year's audit free and then I'll go back to my original auditors. Or if I submit it for tender the second year and I get a low ball from another firm, then I'll go with them for a year as well. So I can hop around from one to another and I've got this fixed low ball fee. It means my audit function is a lot cheaper. How reliable are the financial statements? Well, they should be totally reliable, but on the basis that each individual firm which lowballs is going to want to minimise their losses, then one may be tempted to question the quality of the audits. Tendering, I've mentioned tendering a couple of times. I've just mentioned it 5 minutes ago. The tendering, can I leave you with that one? When I was setting up my own little practice, I'd been working abroad and pretty much lost touch with England. Anyway, when I came back, a friend of mine said, "Will you attend to the accounts for my father's business?" So I said yes. About 3 years later, I then got my second inquiry. So it was not an audit, it was just accountancy work. I got my second inquiry, but 2 years after that I got my third inquiry. So I slowly, very, not aggressively, I slowly built up until I had a reasonable income from my little practice. Where do you get new clients from? Where does an audit firm get new clients from? What is it that would make you, not you, particularly you, because I imagine you're governed by a head office in America, but if you had your own little company here, where would you go if you wanted an auditor? And what would make you want to change the auditor? And you, for instance, as an auditor, how would you, as a sole practitioner, not working for your employer, as a sole practitioner, how would you go about getting new clients? Looking for recommendations, yeah, but if you don't have any clients, how can you be recommended? When you qualify and you've got your practicing certificate and you've got the little brass name plaque outside and you put it on your garden gate there, and hopefully people will pass and say, "Oh, look at that, a new accountant in the area, I'll go there and see if they'll do my accounts." How many people are going to do that in a year? Not many. So how do you get new clients? Well, you can do lowballing. You can do advertising, but you're advertising in yellow pages along with everybody else. You could say, "It's easier to sleep with me." Don't think that would go down well. How do you get new clients? Recommendation is the only way. That's what I did. I had my client, and then 3 years later I got my second. 2 years after that I got my third. And it built up slowly over a period of years. So how do you get new clients? It's very difficult. And what is it that motivates someone to change their auditors? It may be that they've outgrown their auditors. Most of my clients that I lost, they had outgrown me because, again, I just continued to be a sole practitioner. If you're looking for a stock exchange listing, then it's better if you have your previous 5 years' accounts audited by typically a Big Four firm or a household name firm. So you may change away from me because I'm not a household name and to maybe a second division firm of auditors or even a first division firm of auditors in order with the long-term objective of asking for a stock exchange listing. So that could be a reason. Could be a reason simply that you feel I'm too expensive and that I've been putting my fees up every year by just a little bit more than the retail price index, a little bit more than inflation, and you feel that maybe that's not justified. But there are a few reasons, unless there's a personality clash between the auditor and the client, there are a few reasons why you would leave the auditor. And if you're not going to leave the auditor, how are you going to persuade people to leave their existing auditor to come to you? Very difficult. How has the approach arisen? Why has the firm been asked? Why are they changing auditors? Is it because we have a good reputation? Or is there a recommendation from a mutual contact? Or are they unhappy with their existing audit fees? Or are they not getting the service that they had hoped for in a timely basis? Is it that I'm taking 6 months to do the audit and it could have been done in 3 weeks? What are we being asked to do? And the letter of engagement comes in there. Lowballing, ethical review. Lowballing, a letter of engagement should be sent. Why? In order to prevent future disputes as to the extent of the work carried out. If I'm lowballing tender, I need specifically to identify the extent of the work that I'm going to do free, rather than say, well, here I am, and say, well, can you do the VAT return? Can you do the tax return? Can you do the corporation tax computations? No, that's not part of the audit. I'm going to charge you for that. So the engagement letter has to be very precisely worded in order to avoid misunderstanding. What are you being asked to do? What's the risk of getting involved? Can we afford to spend the time? Do we have the competencies? And we're back again to logistics. Do you really want another 31st December year end? Or is it already hectic between 31st December and 30th of April? Do you really want another 31st December year end client? Or would it be better to have a 30th of June one? Spread the workload through the year more evenly. You may turn it down if it's 31st December. We don't have the staff to do it. Logistically, we're not able to do it. Where is the client, prospective client, located? Do they have a single office, a single location, or do they have offices around the country, or around Europe, or around the world? And can we service that? I think I'll do the Sri Lanka audit this year and zip over to Sri Lanka or Trinidad. So you've got to imagine, you've got to think what the logistical problems are. Travelling. Do you want the city on the coast here? Do you want a client over there? Because that's going to involve travelling expenses, it's going to involve hotel expenses, it's going to involve overnight allowances, or would you rather just stick here within the city? So all of these things need to be considered. Do we have the competences, the staff, the numbers of staff, the time available to do? What are the deadlines within which we're going to have to work? All of these things should be matters to be considered by the auditor when determining whether or not to accept an invitation to be nominated as the new auditor. Page 24 is a little example. What work would you perform in order to assess the risk attaching to a prospective client? You've been asked, you've been approached to be the auditor of a new client. What work would you do in assessing the risk attached to this prospective client? What matters would you consider before you said yes? Availability of information, yeah. Are they prepared? Will they be willing? Will they be happy to provide us with all the information on a timely basis, or answers to our questions on a timely basis? Yeah?
And also the publicly available information.
Again?
Publicly available, like media.
Yeah, all right. Look at publicly available information. Go to the company, the country's registrar, and look at the history or the official documentation filed by the company. See if there's anything there to give you cause for concern.
Google.
Google, yeah, by all means. Internet, by all means. I mean, you smiled when you said it as though you thought you were embarrassed saying. No, the internet is a wealth of information, and all the press cuttings related to the company, any media coverage which casts a degree of doubt about the integrity, you'd want to know that. You'd want to look at the identity of the directors, those people in charge, to see whether or not there's any questionable activities with them.
Facebook.
All right, Facebook, LinkedIn, anything like that which is going to give you information about the personnel, the products, the locations. What else would you do? To assess the risk attached to a prospective client. Look at the products, the industry, the area of business that the prospective client is involved in. Some prospective clients carry greater risk than others. In the UK particularly, we have a very strong animal protection lobby who are fiercely against the concept of using animals for drug testing or for cancer research or for cell technology or genetically modified crops. We have a very strong lobby against these things. And if you start becoming involved in an area where the client is involved, and it's a contentious, heavily discussed, heavily argued area, you're going to bring a degree of doubt about your own integrity. So maybe you don't want to be involved with them. These are matters that I feel you should be thinking about for that example too. What work would you perform? Media, social networks, history, publicly available documentation, discussions with management. There was some research carried out, I think it was in the UK, might have been America. Some research was carried out, and it said clients will change auditors more often because they will select the auditor not because of the fee levels, because they're not that fee sensitive, or they weren't until 5 years ago, not because of the fee level, but because of the interpersonal skills of the client, the prospective client, and the representative from the audit firm. And they didn't use the word interpersonal skills, they used the word chemistry. That the chemistry between them was such that the client felt they could get on with the auditor, and the auditor felt they could get on with the client. So the personal chemistry between the two parties is an important element in whether or not a prospective client chooses you or chooses somebody else that they get on with. Why is it chemistry? Because if you add water to acid, you get an adverse excited reaction. But if you add acid to water, it just dilutes the acid. And if you can get on nicely and mix together nicely, auditor with client, by adding the acid to the water, that's far more acceptable than adding the water to the acid, which gives an explosive result. That would be interesting to see you write that down in an exam answer. You're on to consider, can we do the work for a reasonable fee? Are we going to get a reasonable return? I have no argument with people who make a profit. No argument at all with people who make a profit. I do have an argument with people who make an excessive profit, an unfair profit. I don't like being ripped off. But I don't object to people making a profit if I ask them to provide me with a service or a skill which I don't possess, then I should be paying them for it. And the same with the auditors. Can we do the work and get a reasonable fee from it? We'll need to consider the amount of work required, the resources available, the location, just logistics. A preliminary estimate of the fee should establish if the return is going to be acceptable. The content of the proposal document and the basic format of the proposal depends on circumstances and the prospective client's requirements. We're trying to convince the client to appoint us. Therefore, want to demonstrate that we've understood the client's particular circumstances, the particular problems that that industry faces, and how we can address and help in resolving those problems. We'll discuss with the client as a preliminary before we decide whether or not to accept the client's invitation to be nominated, we'll discuss the fee and think about the fee, an assessment of the requirements, an outline of how we're going to address the problems, assumptions made, the deadlines which are to be imposed, the reporting requirements, the law and regulation which has to be satisfied, how we would approach the engagement. Are we going to do an interim and a final? Are we just going to do one annual visit a year? An outline of the firm and the staff involved will be included within the tender document, trying to persuade the client that we are the ones that you should select. In terms of audit engagements, these normally take place just after 3 o'clock. And one of the terms of the audit engagements is that coffee should be provided on a regular and frequent basis. I think regular and frequent, 3 o'clock, 5 past, is regular and frequent enough. So we'll have a break. We're on page 24, where are we down? We're down to terms of the audit engagement. So right at the bottom of page 24. Terms of audit engagement. The auditor and the client should agree on the terms of the engagement, should be recorded in writing, should be well documented. Why? In order to avoid dispute. In order to avoid the possibility that the client misunderstands the extent of the work of the auditor's responsibilities and the scope of the work that they will carry out. It needs to be set out in writing, and it needs to be agreed. So we'll send the letter of engagement to the client and discuss it with the audit committee, and we'll ask the client to sign. We'll send 2 copies. We'll ask them to sign 1 copy and return it as an indication that they have understood the terms of our engagement, so that when a dispute does arise at the end of the audit, we send the fee note, they say, we didn't expect that, and we say, well, actually you should, it's there in the letter of engagement. So it helps to avoid future dispute. Once with terms of the engagement have been agreed, and this agreement of the terms is done orally, so we will discuss with the client the terms of the engagement, the scope of the work, go back to the office, type up the letter of engagement and send 2 copies to the client. They will sign 1 and send it back. So it's orally discussed and then formally confirmed in writing. And once the terms have been agreed, they remain in force then from 1 year to the next until something changes, and then we send a new letter of engagement. But it's become common practice and seen as good practice that even though the terms of the engagement may not change, you would still send a letter of engagement each year. And I presume, for instance, you do. You send a new letter every year. Even though it may be exactly the same as the previous one, just the date's changed, it's exactly the same. Auditors should regularly review the terms of the engagement to make sure they're appropriate. And the engagement letter documents and confirms the auditor's acceptance of the appointment, and includes a summary of the responsibilities of the directors and the auditors, the scope of the engagement, and the form of any report. You send a copy of the report that you would hope to be able to issue. You'll send them a clean report that, in our opinion, the financial statements do show a true and fair view, blah, blah, blah. But it may be, and you would warn them, that it may be you feel obliged not to give them a clean report and give them, therefore, a modified report, modified either by way of qualification or modified by way of emphasis of matter. So you would notify them of the possibility that that might happen, because otherwise they're going to turn around and say, you can't say that. You gave us an example of the report in the engagement letter, and now the report that you're giving us is different. So you need to pre-warn them. And earlier we had the situation, it's a sentence which I didn't read, but it's in the notes. It says, it's good practice that if your fees that you're going to charge this year are greater or represent an increase over the fees charged last year, then you would write to the client and explain why there is this increase in fees. Typically, it will just be an increase because of cost of living, because of the retail price index. But just occasionally, it may be that you've had to do additional work agreed by the client. You've had to do additional work. You've had to increase the scope because maybe you've discovered some element of questionable activity which has involved you in extensive and extended work. So, keeping in touch with the client, close liaison with the audit committee particularly, continually, repeatedly reminding the client that it's the client's responsibility to maintain the accounting records, maintain the internal control system. It's the client's responsibility, it's not the responsibility of the auditor. Descriptions of practicing firms. This was an exam question not long ago, actually. How a firm may describe itself. There is a strict restriction on the ability to call yourself firm of certified accountants. You can't do that. You're not allowed to call yourself a firm of certified accountants unless you have a practicing certificate and an audit registration certificate if you're going to be registered auditors. So you can only describe yourself as chartered certified accountants or certified accountants where at least half the partners are ACCA members. And these partners who are ACCA members control a majority of the votes. Firms holding an audit practicing certificate may describe themselves as registered auditors, and a practice name should be consistent with the dignity of the profession in the sense that it should not project an image inconsistent with that of a professional bound by high ethical and technical standards. You can't call yourself the best auditors the world has ever seen because that's not consistent with the high profile that the profession is trying to maintain.